Hey, what's up, folks? It's Tajir, aka Capital King in the building, and right now I'm about to talk to y'all about the stock market. So, number one, I'm gonna do a lot of analogies here. So we're gonna start off. We're gonna go on a micro level from what is the stock market, what is the stock exchange, what does the company represent, and what is the stock, and what is the purpose of investing in stocks. And I'm gonna compare it to shopping malls, right? So, the stock market is a general market full of stocks to be traded. And the best way I can compare it is think of every mall in the world, right? Think every mall in the world. The stock market is the same as every mall in the world. You go in every mall in the world and they have certain items for sale. They have all of these kind of businesses in there, right? And all of those malls connected represents the mall market, right? That's the mall market of the world. So next level, we have the stock exchange. Now, what exactly is the stock exchange, right? So the stock exchange is the individual mall, right? So we live in Westchester, so the Galleria is a stock exchange. The White Plains Mall is a stock exchange. The stock exchange is the specific place where these specific stocks are being traded, right? So now next level, boom. Now companies, how do companies go in the stock market? When companies go in the stock market, they do what is called an IPO, or going public. That's when a company decides, hey, we have revenue. Let's say we have 5K, we have 500K in revenue. We're doing really well, but we want to open up 30 stores within the next 5 years. And with our current revenue, we're not going to be able to do that. So we need a lot more money. And we don't want to take out a whole bunch of loans from the bank, because that's going to make our debt to equity really, really bad. And it's going to be hard for us to make a profit, because we'll be consistently paying off loans and loans and loans and loans and loans. So what they'll do is an IPO, where they take the company and they split it up into pizza slices, right? They split it up into, it could be hundreds of slices, it could be thousands of slices, it could be millions of slices, right? They just take it into slices, right? And they keep a certain amount of slices for themselves. To maintain control, they keep a certain amount of slices for themselves. And then the other slices, they put up for sale to the public. And then the public, which is you and me, we buy those slices, right? And that's how they raise money. So let's say they take 100, they make this stuff into 100 slices, and they keep 40 slices, and they sell the other 60 slices for $60 a slice. Being hypothetical here, 6 times 6, that's that's 36. That's what, $3,600 right there. So they just had an extra $3,600 right there that they didn't really have to create a product for. They just opened up the company for sale. That's a really small example, but that's how it goes. So back to the mall analogy, right? So each company that is listed on the stock market is the same as a store that is in the mall, because they're essentially doing the same thing. Why does a store go into a mall? A store goes into the mall because they said, hey, we need to sell more items. We like this location. We know these people here have money. Let's put our store in this mall so we can sell more products. And the same thing with why a company will choose a specific stock exchange. Like, let's put ourselves on this specific stock exchange because we know these people have this kind of money. We know that if we put it here, we're going to sell a lot of items. And we know that these people are doing a certain amount of buying, period, right? So each store in the mall represents a company in the stock market. Now, what is the stock? The stock is like the same thing as the products a company is selling. So if you go to, I don't know, let's say, what's the store in the mall? Let's say Apple, boom. In Apple, they're selling iPhones, right? They're selling iPhones to you. They're selling iPads. They're selling like iMacs. They're selling like iWatch. They're selling, what else they got? iPods. They're selling everything. So each item that they're selling in the store is thousands, hundreds, whatever it means items. That's the same thing as the stock, right? Companies are on the stock market basically as a storefront, and you come and you go, hey, I want some stock. They go, hey, here, we got some stock for sale. Boom. And both do the same thing. When companies or when stores are selling items in a mall, they're making money and they're selling them to make money. And when companies are selling stock, they're selling them to make money, right? So why is all of this important? And why should you even buy stocks? Like, I know you heard it's dangerous, it's risky, you're gonna lose all your money, it's gambling. All right, you want to invest in the stock market because, number one, you want money working for you in your sleep. I know, as you can see, as time goes by, you can look at any studies from 1970s, 80s, whatever, that things are getting way more expensive, and it's going way past inflation. Like, I did a project on the cost of college education, and college education increased like 300% over inflation. So all that shit, oh, it's just inflation, is bullshit. Things are more expensive, right? And if you look at salaries are not being raised at the same rate as prices are going. Salaries might be 1% to 5% a year that's getting raised, right? So you want to invest in the stock market so you have money that's coming in that you don't have to physically go to work for. You feel me? That is number one. Number two, companies will pay you dividends, right? So when you own a company's stock, every once in a while, like, let's say they did really good this quarter and they made $1 million extra, and they don't got nothing to do with the $1 million. They'll say, hey, let's pay it back to our stockholders because we appreciate them. Now, depending on the breakup of how many stocks there are outstanding, so if it's $1 million, right, and let's say there are 100 stocks outstanding, each stock will get what's that? $10,000. Each person will get $10,000 in dividends. Each person will get $10,000 because they own a stock, right? And then number three, also, when you're just saving money, I just told y'all that things are getting more expensive. So $100 today is worth a lot more than $100 5 years from now. So when you invest in the stock market, even if your money doesn't shoot up and grow really, really high, at the very little, you've kept up with inflation. Because companies' stock prices are changing every single day and they're trading items every single day. So when you have your money invested, the money is growing. So at the very little, your money has kept up with inflation because you have it invested. That means it's going to work. When you invest your money, you put your money to work. The same way that you work and you go and you put in hours at this place, when you invest your money, you're telling your money to do the same thing. You're saying, hey, each dollar, boom, you're gonna go work over here in this business for 8 hours a day for the next 5 years, and then you're gonna come back to me, you're gonna bring me back all the cash that you earned. So that's what the purpose of investing is. So even if you don't grow a whole bunch, you'll still keep up with inflation, right? You'll still get paid dividends, which is just a blessing for owning stock. And it's literally like free money. When you go in the store and you spend money, the money is gone. You're not getting the money back. The money is done. But when you go and you put your money in the stock market or you invest in this company or whatever, you think the money is gone, but your money is still sitting there. Your money is still sitting there. And it's more than likely going to grow. Yes, there are cases when the money will go down, but this is why you do your research before you invest in something. And really, I'm not going to tell anybody how their risk tolerance should be, but if you're scared to lose any money, then you shouldn't come outside because you lose money every day going to spend it on bullshit, going to buy food and clothes and stuff like that, things that really don't matter. You lose it when you're just putting it and hoarding it and just saving it and not doing nothing with it. You're losing money all the time, really. So why not take a chance at actually getting some money back? Because when you just go spend money, you're not getting the money back at all. You're just getting a product or service that you might be okay with at the time and you'll get over it eventually. But when you invest the money, there is a very, very high chance that you will make a return. Even if it's $1, that's $1 that you didn't have to work for, that you just got back. So in a nutshell, that was just investing. That was a breakdown of the stock market and why you should invest. Thank you for your time.